Your roadmap to the latest in auto? Welcome to Highway Herald. Buckle up because international trade just hit a major speed bump. The US has imposed massive tariffs on $262 billion worth of imports from the EU and Canada, triggering economic turmoil. Spearheaded by US President Trump, this move has shaken global markets, igniting diplomatic outrage and fears of a trade war. But why now? What's the real motive? And how will it impact global trade and consumers? Let's break down the 7 biggest takeaways from this tariff escalation. Takeaway number 7, the long road to retaliation. This trade war wasn't born overnight. It's the result of years of mounting tensions between the US, the EU, and Canada over perceived unfair trade practices. President Trump has long been vocal about trade deficits and barriers that, in his view, put American industries at a disadvantage. At the heart of this dispute are concerns over European subsidies to industries like aerospace, which US officials argue skew market competition. Meanwhile, Canada's tightly controlled dairy industry has been a frequent flashpoint, with American dairy farmers decrying high tariffs and quotas that effectively block US exports. This latest round of tariffs marks a dramatic shift away from diplomatic negotiations in favor of aggressive economic retaliation. The message from Washington is loud and clear. The US is taking a hardline approach to what it sees as decades of lopsided trade agreements that have put American industries on the back foot. Takeaway number 6, industries caught in the crossfire. From Detroit's assembly lines to Bordeaux's vineyards, the impact of these tariffs will ripple across industries, reshaping markets and supply chains. European automakers, particularly those from Germany and Italy, face a severe setback. The US, a crucial market for high-end European vehicles, is imposing a 25% tariff on imports, potentially leading to plummeting sales, job losses, and disrupted supply chains. Canadian farmers are also caught in the crossfire, with dairy, timber, and food exports under threat. These tariffs could flood Canadian markets with excess supply, driving down prices and squeezing farmers' profits. Meanwhile, American consumers may soon see higher grocery bills as import competition diminishes. Luxury brands like Louis Vuitton and Gucci are feeling the pressure, with higher prices possibly curbing demand. The steel and aluminum sectors are also taking a hit, with increased costs for manufacturers likely driving up prices on essential goods, from appliances to cars. Takeaway number 5, the political engine driving these tariffs. Beyond the balance sheets and trade reports, these tariffs carry significant political weight. Trump's America First agenda has consistently focused on revitalizing domestic industries, and these tariffs serve as a bold statement of his commitment to American manufacturing. For voters in industrial regions hit hard by globalization, this move reinforces his administration's stance on protecting US jobs from foreign competition. It appeals to a base that sees tariffs as a necessary measure to level the playing field against international trade imbalances. However, there's a downside. While certain sectors may benefit from protectionist policies, industries dependent on global trade could face job losses and rising production costs. Businesses relying on imported materials may struggle with higher expenses, potentially leading to reduced competitiveness and layoffs. The administration is taking a calculated risk, gambling that short-term political victories will outweigh the broader economic consequences that could emerge from escalating trade tensions. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore takeaway number 4, the counterattack from Europe and Canada. If the US thought these tariffs would go unanswered, think again. Both the EU and Canada have already fired back with their own economic countermeasures. The EU's playbook, hitting America where it hurts. Brussels has condemned the tariffs as protectionist overreach and is actively planning a strategic counterstrike. Potential targets? Iconic American exports like whiskey, motorcycles, and denim, products that hit key US states where political pressure could mount against these trade policies. Canada's counterstrike, fighting back with billions. Ottawa isn't sitting on the sidelines either. Canadian officials have announced retaliatory tariffs on approximately $30 billion worth of US goods, targeting everything from steel and aluminum to agricultural exports. The message is clear. Canada intends to protect its industries while urging a return to trade negotiations. With each side ramping up retaliatory measures, the prospect of an escalating trade war is looming large. If this turns into a prolonged economic standoff, the global economy could be in for a turbulent ride. Takeaway number 3, the global economic fallout. The ripple effects of this trade war stretch far beyond the immediate countries involved, creating a serious threat to global economic stability. Financial markets have become increasingly volatile as investors brace for disruptions that could slow economic growth and impact business confidence. Industries with complex global supply chains, such as technology and automotive, are particularly vulnerable to sudden market shifts, with uncertainty driving cautious spending and investment strategies. As tariffs take hold, investors are turning to safe haven assets like gold, signaling fears of prolonged trade instability. Meanwhile, businesses reliant on raw material imports are preparing for higher costs, which could squeeze profit margins and lead to price increases. The intricate nature of modern manufacturing means that tariffs at multiple production stages can compound expenses. For instance, a single car assembled in the US may include components sourced from several countries, raising production costs and ultimately forcing consumers to pay more. Takeaway number 2, the China factor. While the current trade battle focuses on the US, EU, and Canada, China remains a powerful force in the global economic landscape. The US has long had trade disputes with China, and this latest round of tariffs may be part of a broader strategy to address global trade imbalances. As tensions rise among Western nations, China is in a prime position to strengthen its economic ties with the EU and Canada, potentially shifting the balance of global trade. China's Belt and Road Initiative has already expanded its economic influence by creating new trade routes and investment opportunities across multiple continents. With Western alliances strained, China could step in to fill economic gaps, forging stronger partnerships that may sideline the US. However, long-term trade relationships remain complex, shaped by geopolitical maneuvering and economic priorities. While China stands to benefit, its policies and market practices remain a point of contention for global trade partners. Takeaway number 1, the future of US trade policy. The imposition of these tariffs signals a dramatic shift in US trade strategy, prioritizing domestic economic interests over traditional free trade policies. This could mean fewer multilateral agreements and a stronger focus on bilateral deals where the US negotiates from a position of perceived strength. While this approach aims to boost domestic industries, it also risks isolating the US from critical global trade partnerships. The long-term question remains: will this protectionist shift ultimately strengthen the US economy, or will it leave American businesses scrambling to compete in a rapidly changing global marketplace? Final thoughts. Where do we go from here? As tariffs reshape trade dynamics, the global economy hangs in the balance. Will this approach lead to stronger domestic industries, or will retaliatory measures push the US into an economic corner? What do you think? Are these tariffs a necessary step for protecting American jobs, or a risky gamble that could backfire? Let us know in the comments below. And if you enjoyed this deep dive into global trade and its automotive impact, don't forget to subscribe to Highway Herald for more expert insights and updates. Thanks for watching, and see you next time.